Most people think option trading is only for Wall Street pros, but the truth? You can understand it in just one video, if it's explained the right way. In the next few minutes, you'll finally see how options really work, how traders actually make profits even when the market falls, and why some of the smartest investors on earth prefer options over stocks. So grab a seat, because this is your no-nonsense guide to understanding option trading once and for all.
Section 1. The big picture. What is an option? Let's start simple. When you buy a stock, you own a piece of that company. But when you buy an option, you're not buying ownership. You're buying a right to buy or sell that stock in the future at a fixed price. There are two types. Call options, you're betting the price will go up. Put options, you're betting the price will go down. Think of it like reserving a seat on a flight. You're not taking the flight yet, but you're locking in the price before others do. That's what makes options powerful.
Section 2. Why traders use options. Traders love options for one main reason: leverage. With a small amount of money, you can control a big position. Example, instead of paying $10,000 for 100 shares of Apple, you could pay maybe $300 for a call option controlling the same 100 shares. That's massive leverage, but, and this is key, leverage cuts both ways. You can make big profits fast or lose your money just as fast. That's why the best traders don't just gamble with options, they use them strategically.
Section 3. How option trading works. So here's how a trade actually happens. Imagine you buy a call option on Tesla for $200, expiring in 30 days. You pay a small premium, say $5 per share. If Tesla rises to $220, your option's value increases. You can sell it for a profit. If Tesla stays below $200, your option expires worthless. You lose the $5 premium. Every option has three important pieces: strike price, your target price; expiration date, how long your option lasts; and premium, what you pay for the opportunity. Options are just contracts, but understanding these three elements separates beginners from real traders.
Section 4. The power of strategies. Once you understand how calls and puts work, you can combine them into strategies, like the covered call, where you own a stock and sell calls against it for steady income, or the protective put, where you buy a put to protect your portfolio from a crash. These are real-world tactics professionals use daily to control risk and earn consistent returns, not just random guesses. Section 5. The risks no one talks about. Options can look exciting, but let's be real. Most beginners lose because they skip one crucial step: risk management. They trade with emotion, no stop loss, and zero strategy. Options decay in value over time. It's called time decay. If you don't manage your positions daily, your premium melts away even if the stock doesn't move. So before trading, always ask, what's my max risk? What's my exit plan? That's how real traders survive the market. Section 6. How to start option trading. If you're just starting out, here's a realistic path. Open a broker account that supports options like thinkorswim, Interactive Brokers, or Webull. Start with a paper trading account. Trade fake money first. Learn one simple strategy like a single call or put. Track every trade in a journal. Your first goal isn't profit, it's understanding how options behave. Once you master that, profits follow naturally. Section 7. Conclusion and outro. Option trading isn't about luck. It's about strategy, patience, and practice. And now that you understand how it really works, you're already ahead of most beginners out there. If you found this helpful, check out my other videos: Day Trading versus Swing Trading, Trading for Beginners, the 5 biggest mistakes new traders make. Those will complete your foundation before you place your first real trade. And don't forget, learning trading isn't about getting rich overnight. It's about staying in the game long enough to win.